Tendencias en tecnología como el Big Data, inteligencia artificial y la revolución de las redes sociales. Bienvenido.
Good afternoon. How many people here, ladies and gentlemen, how many people here today own some Bitcoin? Who owns Bitcoin? Put up your hands really high. Just a small handful. Okay. It's wonderful that you do. And Bitcoin and blockchain, of course, are a very exciting topic today. And we're going to talk about this. I'm going to try and discuss this in fairly practical terms and not so much theoretical terms. Blockchain is not an easy concept to understand. And the implications are far-reaching. And of course, all day today we've been talking about the innovations with fintech, and blockchain is going to be playing a role in that. But before we get into that discussion, I'd like to take the first 5 or 10 minutes to discuss where this is all coming from. It's a story you've heard before, but there's some implications that I'd like to focus on. This is all a function of technology, of course. And there's a revolution taking place right now. I specialize in technology trends, of which blockchain is just one. And artificial intelligence and machine learning, there's many other examples of technology. But it's all being driven by one primary trend. And it's the cost structure in the data space. So I'm not going to bore you today with charts, but I'm going to share one chart with you today. And what we're talking about is the cost of storing 1 petabyte of data. So what's a petabyte? So 1,000 kilobytes is a megabyte. 1,000 megabytes is a gigabyte. 1,000 gigabytes is a terabyte. 1,000 terabytes is a petabyte. Okay, it's a lot of data. So the cost of storing 1 petabyte of data in 2010 in the United States was $80,000. Does anyone want to hazard a guess on what we're expecting to pay for the same thing in 2020, just 3 years from now? Any ideas? Just yell it out if you have a thought. What's it going to cost in 2020? 10,000. I'm sorry? 100. That's ambitious. Anyone else? 1,000? The answer is $4. So this might be my best slide. What's happening in the data space is astonishing, and it's not just happening in data storage. It's happening in data storage, it's happening in data bandwidth, and it's happening in data processing. In all three spaces, the cost structure is collapsing. We are truly in an exponential environment. And when people think about exponential environments, they think about the curve going up like that, which it does. But the inverse of that is that the cost structure of any one capability goes through the floor. Right? The whole data environment is being liberated so that everyone can do it. 10 years ago, 15 years ago, it was only the large companies, it was only the large banks that could afford to engage in this data environment. But increasingly, every day that's going by, the cost structure is coming down so quickly that all these new entrants are coming into the space. Right? And that's really the underpinning of this whole thing. And we see the implications in the software packages that we're using in our businesses, increasingly incorporating data. We're seeing implications in the predictive maintenance space in manufacturing to predict when a machine goes down before it actually goes down. It's much cheaper to fix it that way. We're seeing implications in manufacturing. We're seeing implications in the distribution sector, mining. Unbelievable implications in mining with sensors in the ground. We're seeing implications in oil and gas, of course, and we're also seeing implications in the refineries and all the different renewable energies, whether it's solar power or wind energy. We're seeing these implications all over the place. It's happening everywhere. We're seeing huge implications in the facilities management space. There's probably 200 sensors in this room. Probably the best example of this right now is Hudson Yards. This is a project that's going up in New York City. It's going to be the most censored residential environment in the world when it opens. But of course, that won't be the end, because there will be others that come up which will have even more. And we're seeing the data being aggregated into smart grids. Probably the best example today is Singapore, but there's other examples around the world. And we're seeing implications in retail, more so online retail than offline retail, of course. We're seeing it in telecom. We're seeing it in healthcare. And, of course, we're seeing it in the banking sector. We're seeing it in insurance. And we're seeing it in capital markets. So what I invite you to do for the next 40 minutes, this is a short session that I have, is to take a step back. And let me tell you, we're going to get into blockchain. I'm going to try and explain that to you. Again, it's a tricky thing to explain, but I want to lay the foundation here at the beginning, start broad, and we'll get increasingly narrow. There's a concept called institutional blindness, where when you're focused in your role in a bank or an insurance company, or you're a broker, or you're a stock, you're a financial advisor, all the different occupations we have represented here, for as little as 3 weeks, you start to have kind of blind spots, and it's hard to see outside your space because you're so focused on your own goals. So that's the role of a conference like that, is to think more broadly, and that's what I invite you to do today. And I'm going to start with one quick story. Does anyone here recognize these two guys? Anybody? Not one? Okay, awesome. Love it. Okay, so let's start with the guy on the left. His name is Brian Acton. And in 2009, Brian Acton was looking for work. And one of the places he applied to work was Facebook. And Facebook turned him down. And he's actually, if you follow him, he's a really gracious, he's a nice guy. And he wrote a tweet about it at the time. Here's the tweet. Facebook turned me down. It's a great opportunity to connect with some fantastic people. Looking forward to life's next adventure. And what might that be? Well, he got together with a friend of his and started WhatsApp, which they grew over the course of 5 years and sold to none other than Facebook for a cool $19 billion. So I'm bitter. I admit it. I'm 46 years old. They're a lot younger than me. But there's a lot of experts, pundits, who came out after this transaction to give their opinions about what had happened. It's an extraordinary transaction, record-breaking. I mean, it was huge. And there's a few interesting ways to look at a transaction like that. One way is that at the time of the sale, the company WhatsApp had 55 employees. So by that measure, Facebook paid $345 million per employee. It's incredible. Another way to look at it is that at the time of the sale, they had 450 million active monthly users. So by that measure, Facebook paid $42 per user. But either way, it's a lot of money. It's a lot of money. Maybe the most interesting way to look at a transaction like this is that over the course of 5 years, it's not a long time. 5 years ago was 2012. I'm sure most of us remember 2012. Seems like yesterday. But over the course of 5 years, 55 employees managed to engage over 450 million active monthly users. Think about it. How many people are in this room? 200 maybe? 55 people. In 5 years, built something that touched the lives of 500 million people. It's astonishing. And the reason I tell this story is because it's a function of the leverage in the system. And this is one of the messages that I truly hope, because blockchain is just another example. But leverage, there's more and more leverage in the system every day. There's financial leverage. There's all sorts of different leverage. But the biggest one is what? It's technology. Technology is a form of leverage. And when we hear all these stories on the evening news or social media about, the rich and the poor, or the people who are doing well versus the people who are struggling and so on, it's a function of this leverage, right? Some people and some businesses are leveraging the trends, and for the most part, they're doing really well. Meanwhile, there's a lot of people and a lot of businesses that are being leveraged by the same trends, and for them it's harder and harder to survive and to succeed. And my message really right from the start here today is that we have to stay on the right side of the leverage equation. As business people, as executives, as owners, as brokers, always think, every day, always, I do it myself. Am I on the right side? Am I taking advantage of the leverage, the technology? Am I on the right side? Am I using it? What does it mean? It means we don't run away from the technology. We have to run towards it, even if it's scary. And it is scary, especially with blockchain. In your industry, it's scary. But we have to find a way to move towards it. So there's a lot of different examples. Software is a form of leverage. You can leverage software. Right? The cloud is a form of leverage. You can leverage the cloud. Right? You can leverage mobile technology. You can leverage increasingly wearable technology. Really cool stuff that they're doing with wearable technology. Robotics is exploding. Right? This is the Baxter robot. The price comes down all the time. And last year they introduced this robot. It sold out immediately. Now there's 5 or 6 different companies making similar ones. This is the Tesla factory. In California, it's just a few miles down from where I live. This is incredible. This could never happen if it wasn't for robotics. California is not a factory-friendly place. There's a lot of regulation. It's difficult to open an operation like this. It's only possible because of the robotics. There's hardly any employees at all, although there is one right there. Here's another view. If you ever visit the Bay Area, get a tour of this factory. Your head will explode. It's incredible. It's happening today. Right? This stuff is happening today. Right? This is an Amazon distribution facility with thousands of these blue shelving units. And you don't have to walk into the warehouse to get what you need. The shelving units are picked up and brought to the front. So you take what you need, and then the shelving unit goes right back to where it came from. There's so many examples of these sorts of things. Right, virtual reality is coming. Everyone thinks it's just going to be video games, but there's huge implications for training, video conferencing. Right? We see autonomous vehicles. That's coming way faster than people realize. And, of course, artificial intelligence, which is driving many of the innovations that we've been talking about all day today. It's all coming from machine learning and in artificial intelligence. What's the necessary component for that to work? Data. Data. Everyone wants the data. If you have a lot of data, the machine can learn. Right? That's what this is all about. So I love quotes. I buy books of quotes. I'm fascinated by quotes. This is one of my favorite ones. The future is already here. It just isn't evenly distributed yet. We don't have to reinvent the wheel. Okay, we don't have to reinvent the wheel. The reason to come to a conference like this is to see what people are doing on the cutting edge. What are people doing at the cutting edge, right? And then how can we, this whole session, this whole conference, tomorrow, later on this afternoon, can I use this in my business? Can I use this in my, how can I incorporate this into my business? That's what this whole thing is about, right? Is to see where's the ROI? Where's the private equity money going? Where's the venture capital money going? That's a great way with these brand new technologies like blockchain, where the use cases are few and far between. Look at where the money's going. Right? That's where you see where the early traction is. So yeah, blockchain is just one more example. Just one more example of leverage that we can take advantage of and that we need to, because it's coming. It's coming. We'll talk about it. So for anyone who doesn't know, blockchain, and I know you know, but it's just there's different levels of familiarity in this room. So blockchain is the technology behind Bitcoin. Bitcoin was the first application of blockchain technology. So the Bitcoin blockchain was the first blockchain. Today there are many cryptocurrencies and there are many blockchains. But the first blockchain was the blockchain behind Bitcoin. And here is the price chart. So do I have a pointer on this? I do. Can you see that little green dot? I did a couple of events and got paid in Bitcoin. And I got paid right here. And I sold right there. So I sold at the wrong time. But Bitcoin has been exploding, of course, in value. And then there's a whole story behind that. We can talk about that as well. But the most important thing, of course, this is, so Bitcoin is limited mathematically to 21 million units. There will never be more than 21 million Bitcoin in circulation. Today there's about 16.5 million. And they continue to mine, they continue to create new Bitcoin, but there will never be more than 21 million. So it's a limited supply. It's kind of like gold in that sense. That's one of the reasons why the value has gone up so much, is because it's a limited supply. And today, the actual, most people who are buying Bitcoin today, by the way, 90% of the trading volume is in China, Japan, and South Korea. So that's where the activity is in terms of trading, particularly China, because China has restrictions on taking money out of the country. So the residents have used Bitcoin as a way to take money out, kind of sidestepping those regulations. So a lot of the activity in Bitcoin is actually happening in Asia. But in any case, the value has gone up tremendously in the last little while. And depending on how you run the math, there are people who, and I'm not saying this is true, I'm just regurgitating what people say, but depending on the percentage of the store of value market, i.e. gold, that Bitcoin eventually takes, it could eventually justify a value of $500,000 per one Bitcoin. So there's a lot of upside potentially, and that's what's fueling this entire process. But let's talk about blockchain first. So here's the basic definition of blockchain. It's a distributed public ledger. So let me just explain that. It's a ledger of transactions. Okay. But the big difference, the big innovation here is that that ledger doesn't exist in one place. It exists in hundreds or thousands of different places called nodes on the network. And it's a consensus-driven system, which means that all the nodes have to agree that the ledger is correct. And that's why you can't hack it. No one's ever hacked the Bitcoin blockchain. They have hacked exchanges and wallets that interact with that blockchain, but the actual blockchain itself has never been hacked because it exists in thousands of different places all at the same time. Right? So you can't, if you hack one, everyone knows immediately that there's a problem. The other thing is that if you make a change to one of the blocks, you have to change all the subsequent blocks because every block refers to the one previously. Right? So if you change one, you have to change the whole thing. So it's incredibly secure. Right? It's incredibly clever, in fact, how it's put together. And so what does it do? When you have that situation where it's consensus-driven, the information exists in a whole bunch of different places all at the same time, which makes it basically impossible to change, impossible to hack. So the system effectively automates trust. Okay, so this is the most important part. It's right here. Right? It automates trust. You're using a system that incorporates trust into the structure of the software. The way it operates guarantees a certain level of trust. Okay? That has huge implications. What do banks do? They guarantee trust. What do insurance companies do? They guarantee trust. What does the county clerk do? Automates trust. The government, all these healthcare companies, hundreds of different players in the economy are intermediaries which are there to guarantee trust. So now we have a system potentially that could automate that entire process. Imagine the cost savings. Imagine the operational efficiencies of moving different parts of the operation onto blockchains so that you no longer have to go through that process. So there's two different sides to this. There's the short term, which I'll call 2 to 10 years. What Henry said in the first part of the day, and again, I thought you did a great job. Your presentation was fantastic. He said you can't tell the future. Anyone who pretends to know the future you should run away. It's true. There's no question it's true. No one can truly understand where it's going to evolve. But from our perch today, with the knowledge we have so far, it looks like this is going to roll out in one of two ways. So there's going to be a short term, 2 to 10 years, where there's going to be a lot of efficiencies available, which is going to translate into profits. It's going to translate into lower operational costs, which is going to allow banks and financial institutions to incorporate more of the unbanked because the cost structure will be lower, so the barrier to entry will be lower. So there's a lot of opportunities in the short term with efficiencies. But then we also have the long term, which I will say is still at least 10 years out. It's not coming soon. But at some point, if this continues to evolve the way it has been evolving, there are some major disruptions that are possible. And we'll talk about both. But I'm going to start with the short term. So let's jump in. Here's basically the primary use cases. Think about automating trust. So these are primary use cases for blockchain. So smart contracts, smart assets, digital payments, digital identity. In the panel discussion that we just heard, they talked about how do you verify identity. Someone sets up a new account. Well, you could do that eventually. The customer could have their identity on a blockchain, and all they have to do is grant their private key for their identity to the bank, and you know immediately that is who this is. So there's efficiencies there. Imagine how much money is currently being spent to try and do the same thing. There comes a time, potentially in the near future, where that part of the process could be automated, and then clearing and settlement as well. So last year, there was a great case history, use case. So you always look at the use cases, the proof of concept. Who's testing the technology? Really important. Right? Get in the mode of always looking for those proofs of concept. Right? Who's testing it? So they tested this last year by shipping 88 bales of cotton, right? A small little shipment of cotton, and they sent it from Texas to China. And they put all this on an Ethereum blockchain. It was a smart contract, which means you can add stipulations and instructions into that contract. Okay? And so once the shipment arrived in China, and they took the 88 bales off of the boat, and they scanned the barcode, well, as soon as they scanned the barcode, the next part of the smart contract executes itself and releases payment and transfers title. Now, today, I mean, this seems really simple. And I don't know if any of you have background in shipping, but today this process could include or involve directly or indirectly up to 30 companies doing different things, ledgers, border controls, literally 30 organizations. Imagine, I mean, seriously, just think about it for a moment. If a blockchain could eliminate all of that, it's huge. I mean, it's an enormous innovation. So when you think about reducing operational costs, this is really a dynamite example because there's a lot of players in the game that are playing small roles that collectively add up to the transaction. But blockchain has the opportunity or the potential through smart contracts, through adding that logic, through adding those instructions to a contract that eliminates all of that and saves a huge amount of money. Imagine wills and contracts that execute themselves. Right? Who loses? Well, think about all the lawyers. Guys, I mean, so there was a study that came out of Oxford recently that said that up to 47% of the jobs in the United States are going to be replaced by technology in the next 15 to 20 years. Same study looked at other countries, more developing countries. I would say probably including Colombia. I was looking at things like Thailand and China and India. Up to 75% of jobs could be replaced by automation. It's really fascinating, and it's a little scary. It's actually very, very scary. You think about the election in the United States with Donald Trump. There's a faction of that population up there that is angry and disenfranchised. And so they voted for the long shot. Try and fix all the problems, right? Well, that faction, that percentage of the population that is frustrated is going to grow as a result of all these technologies, right? Lawyers, accounting, finance, in the finance departments per billion in revenue. So how many finance employees do you have per billion? That number has gone down by 40% in the last 10 years, already today. So it's not like we're not talking about the future. I mean, it's happening right now. We're in the middle of it right now. And blockchain has that opportunity as well. So look at this. Barclays used blockchain tech to trade derivatives. Why did they? There was a use case. Their proof of concept. They're seeing if they can do it. Why? Because they can eliminate intermediaries, which does what? Saves money, lowers the cost structure. Right? Efficiencies equals profit. That's what everyone's after. Everyone sees huge efficiencies. And so they're investing. You know, it's interesting, and we'll get to the long term in a second, but in theory, The companies that are most threatened by blockchain are what? Banks and insurance companies. Meanwhile, the companies that are investing the most in blockchain technology are banks and insurance companies, right? So again, there's this short-term versus long-term view. The technology's coming either way. We have to run towards it, even if there are risks on the horizon. Right? We'll cross that bridge when we get there. In the meantime, let's take advantage of an incredibly clever and powerful technology. So Barclays is testing it. Ripple is another cryptocurrency. I said before that the Bitcoin is just one cryptocurrency. It's one token. But there are hundreds of different tokens, different cryptocurrencies. And Ripple is one which is targeted primarily to international remittances. And this is a fascinating one for your market because remittances, no American expats are sending remittances back to America. Right? No German expats are sending remittances back to Germany. No Japan expats are sending money back to Japan because the standard of living, the cost structure is different. The cost of living is higher there, right? Where do the remittances go? They go from the developed countries to the less developed countries. Mexico gets $25 billion a year, remittances from Mexican citizens who live in the United States who are sending money home. Right? The Philippines, the government of the Philippines is investing in blockchain technology to allow their expats to send money home and pay less fees. What do they do today? They use Western Union. They pay 8%, 10% in fees. Hey, think about Mexico, $25 billion per year. What's 8% of $25 billion? That's $2 billion. So you've got a big incentive to create a blockchain alternative, which reduces that $2 billion to maybe a few million instead. Right? It's a huge financial incentive, which means what? It means the developing world has an advantage. This is one of those situations where the developed nations, the ones who are all flying high, like they got everything figured out, like Europe and the United States and Canada and Australia and Japan, as great as those countries are, I grew up in Canada, I live in the U.S., the bottom line is the advantage goes to the developing world. You have a bigger opportunity. You have more money that you can save. Ripple is the currency that's designed to help lubricate that process. Right? Lower fees, lower operational costs. And a lot of banks have done trials with Ripple to see how effective it is. So this is, again, we're not talking about the future. This is already happening. Okay, we should look at it as banks. The people I know that Colombia is an interesting country because your top 3 banks are Colombian owned. They're not foreign owned. There's an opportunity there, I think, to run towards this technology and try and spearhead it and get it moving. All right. Huge opportunity in insurance because there's so many fraudulent claims. So here's a couple of startups. This is Everledger. They're creating a digital vault where people can get an immutable ledger of asset ownership. Right? What do you own? What are your assets in a ledger that can't be modified, that can't be changed? Right? There's other companies doing similar things. This is Block Verify. This company actually, their first asset class was precious stones like diamonds. That's where they came from. But today they're broadening out to other asset classes as well. Trying to provide, again, we were talking about the digital identity for the banks. This is similar. How do you have an immutable record where you can say, yes, I own it? And there have been discussions right here in Colombia because there's been all sorts of disputes with property ownership in the more rural parts of the country where people have sold property that they didn't even own in some cases. And so there's an idea that, hey, we can put property ownership of Colombian land onto a blockchain to eliminate those problems. With some of the with the peace talks with the FARC, there's all sorts of issues that came up there about who owns what. I'm no expert, just read about it. It's fascinating. So these things are being talked about right in your backyard. And so here's Tradle, which is doing Know Your Customer, verifying customer identity. Again, what we've been talking about, these are startups. We'll talk about more startups in just a little bit. I'll show you some simple tricks to find out who's in the game. But they're doing some fascinating things. And that, of course, has huge implications in healthcare, where you can go to any health provider and, again, just issue your private key to your medical record, where immediately you don't have to go through the whole process of your medical history and going through it again and again with every company that you interact with. These things can all go onto a blockchain, and of course there's huge implications for banking and direct payments. So there's seriously, think about your business. There are lots of applications, and I should say, by the way, financial sector is a very complex, sophisticated sector with lots of different layers that interact with each other. The sector is not going to disappear as a result of blockchain. But what's going to happen is individual parts of the business, right? Hey, maybe we can put this on a blockchain, save some money. Hey, maybe we can put this on a blockchain, save some money. By the way, collaborating with your competitors is basically essential. That's why I thought it was great to have this panel with the 3 banks represented. The blockchains, by definition, are decentralized. We'll talk about that in just a little bit. So you can't, there's no point of having one that only works for your one organization. The whole point is you create something that multiple organizations can intersect with. That's the true opportunity. So the question is, how do you make some money? So I'm going to look at, I'm going to go through this. I'm going to go through 4 different ways, and I'm going to look at it from an individual investor perspective, because it's a perspective that we can all identify with, but it'll give you an idea of who's basically in the space. And I live in California, as I mentioned, in the San Francisco Bay Area, and I'm sure some of you might know that in 1849 we had a gold rush in California. And people always ask, in the gold rush, who made the most money? And the answer to that question is the people who sold the shovels. So, and there are parallels that we can take from that and apply to the blockchain environment. So the first way is to invest directly in blockchain providers. So who is in the space? And there's some companies, venture capital companies, that are already doing this. This is Blockchain Capital. They invest exclusively in blockchain startups. So that's been part of their positioning in the market. And they have competitors. This one is based in China, doing the same thing. But there's also, I think it's good for all of you to take a look at who is in the space. What does the landscape look like? Who are the providers? Who are the main people in the game? And if you go to the internet, there's all kinds of these infographics that lay out the major players, very smart people putting these things together, that you can do research in a few minutes and get an idea of who's in the game and how does the landscape, how is it delineated? How is it organized? Who are the different players? And I got these just by going to Google Images, and I just searched for blockchain landscape and clicked images. And you can find this stuff right away. So it's a very simple thing. There's nothing sophisticated about that. But the bottom line is, in just a few minutes, you can open it up. And earlier on, we heard from Finovista. Did I get that right? Finovista. Fascinating what they're doing, identifying the specific fintech companies right here in Colombia. Guys, you should get on all of those email lists. You should go down the list of all those websites and visit the website and sign up for updates so you start getting information. They're going to send you their best stuff. They're trying to sell you. They want you to be a customer. So you're going to get emails with all of their latest innovations, all their developments. I highly recommend that kind of stuff. Super simple things to get in the loop and start being more and more familiar. You're going to get ideas. You're like, hey, we could do that. You start interacting, right? Also the big boys. So there's large enterprise providers, Microsoft and Oracle and SAP and others. Microsoft Azure is their cloud solution, but they introduced their COCO framework, which is a blockchain enterprise solution. We're going to see more and more of this as time goes on. We're going to see all sorts of people are going to create out-of-the-box solutions that you can just plug into and are very simple to configure. We're not at that point yet. It's going to take some time. But that's what sorts of people are creating. So they're looking for customers, right? They're selling shovels. And so their platform right now is boasting 1,600 transactions per second, which, of course, you know is not enough. In the banking sector, you'd probably need closer to 5 million per second or even more. But it's a start. Guys, it's coming. It's coming. Right? Every time you look at this website, it's going to be a higher number as they figure out the kinks and get things working. There's still latency issues. So as those latency is improved, the number of transactions per second is going to go up. So these things are improving, and we should monitor those as we go along of how we can incorporate that into our businesses. And these are a whole bunch of other enterprise solutions. Again, you can find this type of information so quickly on the internet, and I highly encourage that you do that as an individual and also as a representative and an employee of the company that you work for. Number 2, you can invest in the industry sectors that will benefit. So again, thinking about operational costs and automating trust. What are the companies, what are the industries, and we've already talked about it, but what are the industries that will benefit? As an individual investor, you can look at companies that are investing heavily into this and invest there, knowing the profits are available. So of course the banking industry is an obvious place to start. Insurance, as we've mentioned. Healthcare is a big one. Shipping and others. Okay, that's another way. But both of those are a little bit boring. Right? When things start to get interesting is when you look at investing directly into cryptocurrencies. That would be fun, right? If any of you, like I said, I got paid in Bitcoin, and when I got paid in the first time, I did 2 events where I got paid in Bitcoin. The first one, I was paid at a time when one Bitcoin was $773 for a Bitcoin. And I held it for about a month, and it was already up to $1,100. So I was like, wow, this is awesome. And I sold and was really proud of myself. Now I know. Anyway, so you could buy and hold cryptocurrencies. And you've seen this slide earlier in the day. John Edge showed this slide. This is very easily accessible. These are the top cryptocurrencies by market cap. So you can see the biggest ones in the game. And there's also services that evaluate ICO opportunities. We talked about ICOs as a way of raising capital, and people are even introducing ICOs for other reasons as well. But the bottom line is there are services that will evaluate these upcoming ICOs on a variety of different metrics. You could potentially invest in something like that. You can be aware of it, right? And then you could invest in currencies or tokens that already exist. And believe me, some of them go up. This is the last 7 days. So top one there, Peep Coin. This changes every day. I go to this website every day just to see what's going on. It's fascinating. So they were up 2,300% in the last 7 days. And here some of them go down. So Yes Coin was down 81.5% in the last 7 days. So there's a lot of volatility. It all boils down to traction and customer adoption. Jeff Bezos from Amazon, that guy is genius. He said, the only thing that's truly disruptive is customer adoption. If customers don't adopt it, it's not disruptive, right? If they adopt it, now you have a problem. Well, some of these get customer adoption and some of them don't. So that's something that you can look at. Well, there's also, all you need to do this is you need an exchange and a wallet, which in many cases is the same provider. So Coinbase is one of the bigger ones in the United States. I have an account on Coinbase. You can set up an account and buy and sell. They have 4 different currencies that they support, so that's one thing that you can do. There's also, this is called cold storage. So this is actually an external USB device that is literally not attached to anything. You can have it in your pocket. This is to make it even more secure. So you can put your cryptocurrency holdings onto that cold storage device and carry it around in your pocket or put it in a safety deposit box and hang on to it and know that no one can hack into it. So there's all sorts of things that are being developed to help people. Some people are holding a lot of money in cryptocurrency, so there's something to be said for it. And number 4, these currency hedge funds. Last night, John Edge rightly pointed out that these are not hedge funds because they're only buying long. They're not selling short. So it's more of a market timing model. But there's all sorts of companies that are coming up to consolidate these different cryptocurrencies and giving people like you or people like your customers an opportunity to buy exposure to this volatility. And there's a number of different providers. So this is MetaStable. They have a minimum of a $1 million investment. Unbelievable. But that's an example of one of these organizations. This is Olaf Carlson-Wee. He's the guy who started Polychain, which is one of the largest companies in this space. But there's a number of these. Gabby is another one that's out there consolidating different currencies. Ether Capital is one. But the one that I actually like the best, and I think the one that's the most accessible for individual investors, is a company called the Token Fund. And they actually have tokens that are right now, I don't know if you can, right now they sell for $47 US, but back just in April, it was $10 at that time. So, and it's going up. And what they do is it functions like an ETF, like an exchange-traded fund. So they're taking a number of different currencies and putting it into a basket. So when you buy a token, you're buying exposure to a number of currencies, and they swap them in and out based on whatever metrics they're looking at. And I don't know what metrics they're looking at. Full disclosure, I have an account on here as well. So, but the point is there's lots of these types of options available, things that you can look into, not only for yourself but for your clients and for your companies. All right, long term. So I said earlier that the blockchain is by definition a decentralized mechanism. The ledger exists in hundreds or thousands of different places, which means no one person controls it. Right? It's decentralized. Right, and we are living through. This is it's almost like a revolution in a way that almost no one's really is aware of it. But the reality is that we are shifting in our world from centralized structures to decentralized structures. This is happening everywhere. Right, so if you pan out the most, like you're standing on the moon looking down, this is the macro trend that's playing out. So the most obvious example is, and it was mentioned earlier today, we used to have central media providers, right? That's centralized media. Today we have Facebook and Twitter and all these blogs, right? Video blogs and podcasts. That's a decentralized media environment. We've gone from centralized to decentralized, okay? We used to have, and still do, centralized power generation. But increasingly, we're moving to decentralized power generation, where you have solar panels on millions of homes. That's a decentralized system. Puts enormous pressure on the energy utilities, right? Because their cost structure, the bulk of their cost structure is fixed expenses to maintain the grid. So when you have people with solar panels, it limits their ability to maintain that grid. This is playing out right now in Hawaii, actually, which is the state in the United States with the highest percentage of solar panels. 12% of homes in Hawaii have solar panels. And the energy utility is dying because they can't charge for the money. They can't charge extra money because that pushes more people into it. So it actually accelerates. If they try to resist the trend, it accelerates it. It's fascinating. So we used to have centralized transportation. Today we have decentralized transportation. Right? We used to have centralized accommodation. Now we have decentralized accommodation. And it is very true that we used to have, and still do, centralized currency with central banks all around the world. And Bitcoin is a decentralized currency. It's not controlled by a country. Imagine, how do you pay tax? How do you collect tax when people are earning money in a currency that you don't even regulate? There's a big hurdle here in the regulation side. But the bottom line is cryptocurrencies right now are functioning behind that entire set of regulations. They're kind of doing whatever they want. It's incredible. So the open source is an interesting case study. Open source, for anyone who doesn't know, is a system where you can take the software for something that you've built and put it essentially in the public domain so that anybody can use it. It's not quite that simple, but Linux is an open source platform. Apache is an open source server platform. WordPress, Drupal, all sorts of different. There's a lot of things that are open source. Tesla has open sourced their plans. But imagine, this is, again, we're 10 years out, right? We're in the long-term stage. It's not happening today. Okay? But imagine 10 or 15 years out if we end up in an environment of open source everything, right? Imagine if there was an Uber without the company Uber. It's just a platform online. It's drivers, people who need a ride, but there's no company taking 20%. It's just out there, right? Imagine if there was an Airbnb without the company Airbnb. It's just a platform, right? And we already have this. This is Libra Taxi. This is an open source version of Lyft and Uber. It's exactly what I'm talking about. So it's already existing. Imagine a Skype without the company Skype. Imagine PayPal without the company PayPal. Now it gets scary. It's pretty close to home. And when PayPal was launched, one of the big innovations that it wasn't the first one, but it was certainly took it to the next level. It's a peer-to-peer model. And of course, we already have peer-to-peer models in the financial sector. We have peer-to-peer lending with Prosper. We heard Lending Tree earlier on. Peer-to-peer insurance with Friendsurance. Right? This peer-to-peer charity, GoFundMe, peer-to-peer investing. These are the types of platforms that blockchain can facilitate in the future without a company. That's why it gets scary. Again, let me just say again, I'm not trying to be dystopian. This is 10 years out, but we have to be aware that a blockchain infrastructure has the potential to eliminate intermediaries. And a large part of the financial sector plays that role. So it's going to happen incrementally with different subsets of the system. And during that period of time, it's going to bring down cost structures. It's going to increase profits in the short term, but then competition will lower the price of those services for everybody. So eventually the profits will subside until the next round starts. Right? But over a period of time, maybe a decade or two, there are some risks on the horizon. Right? And that's the long-term case, is that the major disruption is possible. But let's not forget where we started, which is the short term. Because there are enormous opportunities. And I say that, it's how do you structure a presentation like this where there is a scary possible future and an opportunistic immediate, an opportunity that's right in front of us. Both are true. Both are true. So, and this is where I think the focus should be. So, here's my recommendations. If you're going to take a picture of any slide, this is probably the one. Seek out proofs of concept, as I've talked about. Any chance you get, right? If you see stories, if you see things that are written up, people using blockchain, read it, right? Go in there, watch that video on YouTube, set up a Google alert so that the emails come to you. Always look for proofs of concept. Number 2, challenge the service providers that you're working with. Whoever they are, who are your suppliers? Challenge them. Ask them, what are you doing with blockchain? How are you using blockchain? Put the pressure on. Get the technology moving. Right? We all play a role in that. Understanding operational costs. That's where, if you know where the opportunity is, you know where the disruption is likely to come from. Let's talk about disruptive innovation for a second, because it's something I talk about quite a bit. And it's a misunderstood concept. But the reality is that there's two types of innovation. There's incremental innovation, which comes from the center of a field of expertise. Incrementally, year after year, things get a little bit better each time. And there's disruptive innovation. That comes from the sides. That comes from the edges. It comes from the fringe. Right? Disruptive innovation always comes from the fringe. That's why people, very smart people, get caught off guard many times with disruptive innovation, because they don't see it coming, because it comes from the sides. Look at Kodak with digital camera. Who invented the digital camera? Kodak! Kodak did. And they looked at it and they said, it's garbage. It's not going to work. And so they abandoned it. And then it followed that exponential curve. And when it started going vertical, they couldn't catch up. It's incredible. Right? Here's a good one. Disruptive innovation comes from the least profitable market segment first, most of the time. Who are the customers? Who are your customers that they're such a pain in the neck? You can't make any money. You can't make any. I hate those customers. What do they want? Someone's going to create a blockchain that services them. And if it's good, it'll go right up the whole value chain, even to your best customers. But it'll start with the worst ones. Right? It's a really strategic question, guys. What is the least profitable market segment of my business? What do they want? If you can answer that question, that's where there's opportunities in this stuff. Collaborate with your competitors. With blockchain, you have to do it. You got to collaborate with your competitors. Number 5, incorporate industry expertise. Don't leave this up to software engineers. They don't have the expertise that you do. They don't have the industry familiarity. They don't know the nuances. Right? That's the expertise that you have. So it's not just going to come from tech folks. I mean, they're going to play a role, but we have to keep industry experience in the loop, because otherwise it's going to go off to the... Software engineers are not the people to be evaluating customer demand, right? They code, right? It's all of you that define, here's what the customers want, here's what we need to do. And last but not least, engage with your regulatory authorities. The regulation is the bottleneck. That's the risk factor. We need to get those regulations in place. It's tricky. It's complicated. It's fraught with risk. It could be a slow-moving train wreck, but we have to get there. You have to get that regulation in place because there's people working on this all over the world. There's no reason why Colombia can't be a leader, just like Philippines right now is trying to be a leader. My message to you today, and maybe the message for the whole conference for that matter, is just to think way bigger. Think bigger about what's possible and what you could be doing. And there's some really interesting. I'm a geek. I go through books by the dozen. I'm really fascinated by leadership and why do some companies succeed and some don't? Why do some people succeed and some don't? And there's some really interesting dynamics, because if you think big, right, number one, you end up inspiring everyone around you. Right? People get excited. They want to be part of the big thing. Your employees will be fired up if you think your customers, your competitors will be inspired if you think bigger. It's true. Secondly, if you think bigger, and I'm not talking a little bit bigger, I'm talking about way bigger, quite often you have very little competition because no one else has the courage to do it. Right? And so this is my closing. I'm just going to have just a couple of examples of this, but it's important to see how these things play out. As poster children, Richard Branson, I mean, that guy's unbelievable. I told you I love quotes, and I truly do love quotes. And of course, he's got 1,000 of them. So this is my favorite Richard Branson quote. The fastest way to become a millionaire is to start out as a billionaire and then start an airline. Genius. Anyway, I mean, so he started Virgin Galactic. I mean, how much bigger are you going to get than that, right? Any question? Not much. Not much. SpaceX, a good example. Elon Musk. This guy's like a personal hero to me. I love this guy. Thinking in first principles. Unbelievable. Seriously, it's like, yeah, he's awesome. So for anyone who doesn't know, Elon Musk is the guy who started SpaceX, the first private company to send cargo to the International Space Station, first private company to do that. And they're reusing their rockets. They're sending their rockets up, and then they're bringing the first stage right back down. So, it's a good example, guys. How much time do I have? Yeah, I got time. So check it out. The cost of sending a rocket to the ISS is about $60 million. About. It depends on the cargo. Okay, $60 million. How much does the fuel cost? Any ideas? How much does the fuel cost? Total cost is $60 million. How much is the fuel? 30? 30 million? 40 million? Anyone else? The answer, this is so crazy. The answer is $200,000. 1/300th of the total cost. 1/300th of the total cost. So if you can reuse the hardware, you can bring down the cost structure by 100-fold or more. Thinking first principles. Thinking of first principles is genius. It's unbelievable what he's doing. And they pulled it off. If you've been following it, this is the first time they did it. In Florida, just before Christmas 2015, they sent a rocket up and they brought the darn thing back and landed it on the same pad. On the same pad. Incredible. Right? And when they pulled it off, their employees partied like it was 1999. Their average age, these folks are 27 on average. That makes them millennials. Millennials get a bad rap. People say they're apathetic, entitled, lazy. It's not true. Those millennials will work harder than anyone you've ever met if you give them something inspiring to work towards. Guys, thinking bigger inspires people. It's actually true. It's not just a cliche. Like, if you think bigger, if you're doing bigger stuff, your young employees, who are the ones who understand your young customers the best, are going to get fired up and do things for you you wouldn't even believe. Any competition with this? Not much. Not much. They started Tesla. Any competition there? Not when they launched. No one thought to produce a high-performance electric car. They wanted to produce slow, ugly electric cars. But Elon Musk said, no, I'm going to give the customer what they want. Right? What's the crazy thing your customers want? The totally unrealistic thing your customers want. One day someone's going to do it. They're going to give it, why can't it be you? Right? Then they introduced the Model 3, 400,000 pre-orders, more than any launch in history. People get inspired, right? They're thinking big. So all this stuff, all these stories, we've heard these stories a million times, right? What do these people have in common? Right? This is an inflection point. Someone said that earlier today. We are at an inflection point. It's a really fascinating time. Guys, the whole world is going to change. The next 10 years is going to be nothing like the last 10. It's going to be a whole new world. Let's get in front of that wave and see where it leads. Right? It's all about leadership. It's about leadership, and it's about using the leverage that I mentioned at the beginning. It's a form of leverage: blockchain, fintech, artificial intelligence, data, big data, analytics. This is leverage, right? Leverage that stuff. Get on the right side of the leverage equation, and they're just thinking a lot bigger. So I'm truly thrilled. This is my third time in Colombia. I spoke in Bogota twice, and I spent 2 days in Cartagena 2 years ago, but I was at a resort that was about 40 minutes outside of town. So it's really been nice to be here in the middle of this place. Looks like Panama with all these skyscrapers. It's really a neat place, and I'm happy to be here. Thank you for your attention today. I appreciate it. Thank you.